that. But first up, let's start off with our top story here. Market regulator SEBI on Wednesday cleared several key proposals at its board meeting. This including revising the listing timeline, FPI disclosures, as well as the much-discussed TER regulations. So Yash is here now with a roundup of all of the highlights that really came through from this meeting. Yash.
Well, Pavitra, very importantly, there were 3 points which were most important from the market point of view, which came from SEBI board meeting. 2 of them were expected. The third one was completely out of syllabus, so to say. And let's talk about the surprise itself. No mention of total expense ratio regulations in SEBI's outcome, which was expected by the market. But when I asked the SEBI chairperson in terms of what has been the status on that, there was a very clear and a crisp answer from SEBI chairperson saying that there has been a round of consultation with the mutual fund industry on the total expense ratio regulations. There has been feedback which has come from the industry in terms of granular details on how economies of scale has been passed on to customers. SEBI very clearly saying that they are willing to take this feedback under consideration, revise the current existing draft consultation paper on TER regulations, and a new draft consultation paper on TER regulations expected to come out in the market soon. Why does that come as a relief for all AMC players? That one sentence from SEBI chairperson makes all the difference, where she says that the new draft consultation paper on TER regulations, the industry looking at that paper will be very, very pleased. So that one was an important one. Apart from that, strict FPI disclosures have come in. These are for ultra-risk FPIs, essentially granular details on ownership, economic interest and control will have to be furnished with market regulator SEBI. Which FPIs qualify under this thing? FPIs holding 50% of Indian equity AUM in a single corporate group. The second condition, FPIs which hold more than 25,000 crore of equity AUM in Indian capital market. The third and the final one which came from SEBI's board meeting was reduction of the IPO timeline. As of current regulations, if the IPO closes today, T+6, which means on the 6th day is when the listing happens and trading commences. SEBI is proposed to shorten this to 3 from the current 6 days, and this will be done in 2 phases. Essentially, in the first phase, it will be a voluntary shortened listing for companies that will be on or after September 1st, 2023, and a mandatory process will come into place from or after December 1st, 2023.
Steps that have been announced, and I guess the big one is going to be this new TER disclosure. But yes, just on on the FPI regulations, the additional granular details that SEBI is asking for. So in cases like you described, where let's say an FPI is owning more than 50% in one single Indian listed entity, so wherever these thresholds are being breached, how much time has been given to the FPI to come out with the disclosures? Because that might be quite important for some of the listed entities from various groups, perhaps even including the Adani Group.
Correct. So there was a consultation paper on this thing. As far as the final details in terms of how much time would be given to disclose the granular details on beneficial ownership, that will only come out once the final regulations are released by SEBI. But more importantly, it's important that all details of beneficial ownership of these FPIs come out, which is what the SEBI has made it very clear. Of course, the timelines will have to be satisfied by market regulator, and the specification on that is expected very, very soon.
Okay, all right, got that. Thanks very much, Yash, for the details there. A very important board meeting and late night action, actually, on Wednesday, just before the market holiday. Let's hear out the SEBI chairperson on a lot of these important issues, and then we'll come and pick it up on the other side.
Proposal was discussed in depth, and the board finally advised SEBI to go back and publish it as another consultation paper. Reason being that, as I had mentioned earlier in some forum, that unlike our normal proposals which are done by way of co-creation with the industry, since this was a price-sensitive subject, we did it with the limited data that we had and without the benefit of the data that the industry had. So once our consultation paper was there, then naturally industry came back with their granular data. Now when we saw that granular data and said, okay, we now understand this, so therefore a lot of the things that we had built into and baked into our original proposal needed to undergo a change. We modified the proposal, and the proposal was actually I think the industry would be quite pleased to see the new proposal. And therefore, what the board said was, look, the proposal has undergone significant change because, as we described, we had more data, new data, and therefore we, obviously, as I've always said, that the data will speak. So our policies will always rely on data. And therefore, the board advised us that publish your new proposal, which you have put to the board, publish it again to the industry, and let us see now with this fresh proposal, which is quite different. Let's see what the feedback is.
Okay, so there the SEBI chairperson really giving lots of hope to investors in AMC stocks. And we're going to be discussing this on Who Moved the Market. Remember, it's our digital offering. We go live on YouTube and on Twitter every day at 2 p.m. Why are AMC stocks rallying anywhere between 5% to as much as 15%? How should investors be prepared for the final TER changes? Remember, the final norms are still not out. Do catch this if AMCs interest you, of course, as investors, as well as, of course, participants in the mutual fund setup. So 2 o'clock, we go live with experts. Join in the conversation. We'll take a quick break on that note, come back on the other side. And then we put the spotlight on the banking space. Remember, the big development there, of course, is the HDFC Bank merger. So what lies ahead for this behemoth? Pranav Dheeraj of Sanford Bernstein will join in.